This week's trades, market movers, and technical levels that count, wrapped up with clarity and precision. This is Weekly Wrap Up with Verified Investing.
Hey everybody, welcome to the Weekly Wrap. My name is Gareth Soloway, here to focus on the technicals, the charts, no BS, just the action that the charts are telling us. Now, huge sell-off on Wall Street today. S&P 500 right now down 2.7%. We haven't seen a down day like this since the liberation sell-off that occurred in April. Markets are breaking major technical support. Granted, they're not confirming yet. So we have to see on Monday if we confirm the breakdown. But I've talked about this quite a bit, about how the markets have been up against major, like epic resistance. And I've been saying, be careful, guys, because there's a bubble underneath this market, an air pocket. And when that collapses, you will see things fall very quickly. Basically, when the dream picture that everyone has made that this economy is perfect, that everything's perfect, is shattered with anything, the downside is fast and furious. Let's take a look at the markets today. Take a look at the S&P now down 2.7% on the day. More importantly, look at the wedge. We've talked about this, right? There's so much major technical factors here. Number one, this was the key right here. This trend line going back to October of 2023 through the lows of August 2024. Then we have this pivot low in January. It was support. Remember, resistance becomes support, and in this case, support becomes resistance. Look at this. Hits here, pulls back. This was only your sixth hit. The seventh hit is the big one. And I did mention that today on my trading game plan. The seventh hit is the big one. And oh boy, it is big, folks. Look at that drop. Again, like I said, when was the last time we saw a down day of this magnitude? Probably going back to this day on April 4th. Actually, interestingly enough, it's a Friday as well. Now, what was the trigger for this? And we'll go over the charts a little bit more, but let's just briefly take a side note to take a look at the trigger. The trigger today was yesterday and this morning, China announcing that not only were they cutting off rare earth exports, even more so, which remember, Trump did not want that. He wanted a deal. He thought he had a deal for more exports. Well, China said, nope, we're going to cut it off even more. But in addition, they accused Qualcomm, China accused Qualcomm of being monopolistic, essentially filing antitrust legal stuff against them. Now, initially this morning, the markets were basically flat on that news. Why? Well, because it was just a one-sided deal. It was obviously a negotiating tactic for the potential for negotiations between the two countries coming up. But then all you know what broke loose when there was about a book-long Truth Social post from Donald Trump, President Trump, that basically just went into everything, saying canceling the meeting with President Xi, basically opening the door here to craziness. And the markets are so priced to perfection, as I've discussed with you guys many times over, that any sort of deviation from that is going to be a shock to the markets. And we've seen that. I mean, again, S&P down 2.71% now. So down at the lows of the day, cratering 183 points. Now, I want to show you this too, because this is equally as important. So one of the reasons why I've been so confident and warning for really the last multiple weeks that the markets were in trouble here or potentially setting up for a big drop was because of this trend line, but also because of this, which is even arguably bigger. Remember, the further back a trend line or parallel goes, the bigger it is or the more impactful it becomes. Take this very simply, right? So your low from the COVID low in 2020 through the bear market low here, through this major pivot low in October 2023, through the liberation sell-off low here, drag that parallel right up like that, right? And what do you get? Holy cow. It went right. Markets went right to that level. Now, if you're someone like me, you're just like, wow, amazing how charts can help predict, right? Nothing's perfect. Technical analysis certainly isn't. But does it give us high probability scenarios? And the answer is it absolutely does. And big drop there on the S&P 500. Again, we're trading at the lows of the day. In fact, markets have closed the S&P down 2.71% on the day. And you just got to respect it. Now, we got to talk about this breakdown here. So number one, it isn't confirmed. So remember, every break up or down. So if it's a breakout, it needs to confirm. Otherwise, it could be a fake out. A breakdown also needs to confirm. Now, this is a nasty wide range red candle, which is a very impactful candle for the S&P or any chart, but it still should confirm to solidify a break of this trend line. Okay. For those of you that have taken the Winning Trader series, notice 1, 2, 3, 4, 5, 6, and on 7, it broke. That is unbelievably important. You know how important 7s are in technical analysis. All right. Now, how low could this go? Well, you're going to get bounces along the way because why? Well, people have been programmed to buy every dip. So if we do gap down on Monday, there'll be some good support starting around 65.30 to 6,500. That would be your first level. If you're looking for how low can it go, this is the low area here. This is where if this really confirms, so let's say we confirm on Monday the downside, then I think you're going back to around 6150 to 6100, former all-time highs before the liberation sell-off. That now becomes support. Remember, resistance becomes support, and support becomes resistance once it's broken. All right, very, very important. So in this case, this was resistance. We came up, we broke above it, we continued up. So if we fall, this becomes your major level on the charts. Now, even more important, this chart here on the NASDAQ 100. And I went over this, folks, in the My Trading Game Plan. Again, don't forget, these are all on verified investing. So again, if you missed it, you can go back and listen. You can see back years of my videos, right? You have these game plans and all of my videos. But one of the things I said this morning in My Trading Game Plan was that we've broken above and we confirmed above this trend line, right? This is a trend line going back to the COVID lows. Incredible trend line, right? Now, once you confirm above, it means that this is major support. And sure enough, we closed above. So here we closed above. We didn't confirm, came back in. That's the bull trap or kind of pseudo rug pull. Then it got back above. It confirmed, and this became major support. And you can see how it hit and bounced, went up. Then it came down again, hit again, and bounced up. Now we slammed right through it to the downside, basically engulfing all of this action. All of this. Look at this. We literally wiped out 2, 4, 6, 8, 10, 11 days of action in one candle. Now, it still has not confirmed. If it confirms, remember the old adage on Wall Street, the biggest moves come from failed moves. In other words, when we break out and we confirm a breakout, if it fails, that's where you get major downside. At least the probability increases dramatically that you're going to get major downside. So watch this, folks. Watch this closely because we could be looking at not just a short-term pivot high, but maybe even a long-term. Now, I want to be clear on this. Part of me says, oh, by Sunday night, Trump is going to tweet, oh, we worked it out, because he does not like the markets going down. Trust me, he is on his phone watching this market, watching the close today, seeing what it's down, and he is not happy. He's shown that, right? In fact, it was a surprise to me as a trader that he even would tweet this during market hours. Very unusual for him. So he must have been really mad. I mean, basically, right? So in any case, going back to the charts, watch to see, do we confirm on Monday, or even if we bounce, we could still confirm on Tuesday or Wednesday. Let's keep an eye on that. And then if that does happen, where or how low could you go? Well, same sort of process here. We simply use the previous all-time high zone. Basically, you're looking at another 10%, about 10% downside. Actually, 540. That would be about just over, right around 10% downside on the QQQ. All right, the 10-year yield, look at this, guys. First weekly close below this trend line. That implies the 10-year yield is going to go lower. All right, the dollar. The dollar did pull back today, even with the flight to safety. And this is very interesting, folks, by the way. Bitcoin got crushed, and we'll look at that chart in a second. Gold actually held up. Now, it didn't take out the highs from yesterday or the day before, but it still rallied while every other asset basically tumbled. And that's something that we should pay attention to, too. It doesn't necessarily make me think that gold can't pull back in the near term off of this key resistance that we talked about, but it does make me very aware that when push comes to shove, there is one true safe haven asset out there now, and that's gold. And so pullbacks for me on gold are buying opportunities, obviously at technical levels. Okay, let's go through a few others. NVIDIA here. This is amazing. So we talked about how it gapped above this level yesterday. Major trend line, right? Going back to the bull market high on 2021. But Look at what happened. We gapped up. We had a weak close, almost a topping tail close. And then ask yourself, did you confirm a breakout or could it have been a fake out? Well, you didn't have a chance to confirm because today would have been the first day it could have confirmed the breakout. And it slammed. Like anyone who got fooled thinking this was a breakout yesterday, boom, to the downside. Just total annihilation, down $9.50, 5% on a $4.6 trillion company. That's a big sell. Now, in all fairness, we're still holding this line on NVIDIA. So this now becomes the big level to watch around 182. If we close below and confirm, then things get really nasty. But right now, that is holding suit. Look at the SMH, guys. This level I highlighted to you, I think a week ago, or maybe even just earlier this week. Look at the lows. This is your March 2020 COVID lows. Beautiful trend line. It deviated below it, hit it, pulled back, and look at what happened. Boom, and reverse on the weekly. And on the daily, you can see it right there. That's that same touch right there. And look at that downside move. So huge move down in the semiconductors today. A lot of that a result of Qualcomm. Look at Qualcomm down 7% today on the back of being basically accused, antitrust filings against them from China. And remember, a lot of their revenue, a fair amount of their revenue from Qualcomm does come from China, and that is why it's a big deal. Look at Hood today. Hood down 8.86%. But again, should this have been, if you are a true technician, this is exactly what you expected. Why? Well, simply put, you had the high end of a parallel, all right, opened above, reversal. This is a reversal engulfing candle. It's even more powerful than a topping tail. You never closed above the reversal engulfing, and you're still at the parallel. So this was, this to me was like, okay, well, that should actually happen. And that's exactly what it did. So amazing stuff there, folks. As Robinhood coming in, Palantir coming in, essentially all of these, Amazon today. Look at the drop on Amazon. Now, it did come into some support here on Amazon, but nonetheless, something to keep an eye on. Now, turning our attention to Bitcoin. All right, if you followed me for a few weeks, I gave you guys literally the playbook here. I said if it broke above 118,000, which was right here, it was going to make a new all-time high, but I said it would stop at 116,200. It stopped on a dime right there. How did I know that? Well, first of all, it was never 100%. It was a probability-based assessment by looking at this longer-term trend line going back to 2017. Major high to major high, literally dictated. Look, every time we hit this line, we pull back. And so I wasn't really, taking that much of a crazy stance that I was like, oh, well, if every time going back to 2017, Bitcoin pulls back when it hits this line, I'm going to go with the high probability that it's going to do it again. Boom, it does it again. Awesome. Great big pullback. First major support here, by the way, right here at around 117 to 118,000. And it is piercing it. It has to confirm below to break. If it confirms below to break, you're going down to about 111 to 110,000, and resistance would still remain up here. All right, so we're really watching. You can't confirm today. It has to be the next trading day, which would be Saturday. So we'll watch Bitcoin. But again, if it closes below this line here, we watch to see, does it confirm this weekend? If not, then I would favor a bounce back up. If it does confirm, we're likely headed down to 110 to 111,000. Now, flipping over to gold here, gold is getting a bounce, not a huge bounce, and it's still stuck within a parallel. So for me, at least, I'm basically, I trust resistance until it fails. I trust support until it fails. It's a good lesson for us all. And the reason why it's a good lesson is because we tend to let our imaginations run wild. Like, oh, I'm going to make $1 million on this trade. Like, oh, it's going to $1 million, or, oh, it's going to zero. Oh my goodness, I'm panicking, right? But in reality, charts are very much segmented like stairs. You go up to the next stair and you take a break. And then you go up and you see if you can go up the next one. Or same thing on the downside, right? And so that's really what we want to do here with the gold chart, which is, as much as I'm a huge long-term bull on gold, I also have to be a logical-based trader. And that's that this was resistance here and that these are supports down here. Okay, so until it breaks and confirms above this line, then that's just simply resistance. It just is what it is. Silver also up today a little bit, but the topping tail is still intact right at the level I gave earlier this week. I said, this is where it's going. This is where I'm going to short it. And I certainly did do that. We already took profits on it if you're in my commodity service. So great job there. But in any case, This again would still be viewed as a bearish topping tail yesterday into resistance. Unless we confirm above this, I respect it till it fails, basically. That's the way it works. Oil dropped, gap fill. We talked about the bounce, and then here's your next breakdown. Again, it's unconfirmed, but if it confirms, it's going down to $55 and a quarter, basically. Natural gas, great example of closing above two trend lines. A lot of retail would think, oh, it's a breakout, let's go long. It didn't confirm, guys. Don't let the big boys fool you. They're trying to take your money at every turn. They've programmed algorithms, literally programmed these algorithms to try to fake you out. This is why emotion has to be subtracted out of trading and investing. You got to just focus on the charts. And again, I stress this a million times in these videos. Charts won't be perfect. Technicals won't be perfect, but at least it gives you a good chance of being right, like 75% chance. If I go into a casino and win 75% of the time, I'm literally there every single day. Every single day. In the charts, if you do it right, you can get your win rate up there. It is doable, folks. It is doable. But you'll still have some losses just within that probability range. Down we go on natural gas, collapsing right back down. Short-term support on nat gas is going to be around 332 to 330. That will be the level to watch. Wow, what a day. So again, folks, we go into the weekend with a big down day. I want to stress that part of me thinks there could be a Truth Social post over the weekend that calms people down, and we could see a retrace on Monday, a bounce on Monday. But in technical analysis, when you get a wide range reversal engulfing that engulfs as many days as this did on the S&P and the NASDAQ, and even on the semis, there's technical damage done. Essentially, today was a wake-up call to people that think, oh, markets may pull back 1%, but then they'll go right back up. It's a little bit of a reality check in the markets. Last chart I have to show you, because if you've been following me this week, I talked about this. I said the VXX, the VIX has broken out. It has broken out. I want to show it to you right now. Last chart of the day. All right, downsloping wedge. We broke out. Look at what happens. The VIX up 13% or the VXX up 13%. Now, listen, it could pull back on Monday, but this was the play right here, given for free right in my trading game plans in the morning. We talked about this over the last week or so, that it was breaking out here above the wedge or through the wedge. Wedge breakouts are explosive, and I would say that's explosive today. All right, guys, don't forget, all we ask, comment, like, share with your friends and family if you think they're getting wrapped up in the ridiculousness of social media and getting hyped to be on the wrong side. Not that we're always on the right side. I certainly have my losses, but it's about probability, logic-based trading. Don't let the market internals and the institutions push your limits to where you make emotional decisions. Every decision should be based on a thesis that is proven in the charts. Always knowing that, again, there's always a chance it fails, but you know when it fails. The beauty of the charts. You guys have a great one. Go have a great weekend. I look forward to seeing you all on Monday. Take care.